Yeah, and we are live to today's panel discussion. Today we have, I think, a very interesting topic in regard to the most recent events. We would like to talk with our panelists about centralized exchanges and decentralized exchanges. What are the differences? What are the advantages of using either? What are the disadvantages? And especially, we would also like to touch on the most recent events, which was the FTX fallout, a major fraud, which has not only affected many retail customers, but also institutional clients. I think just yesterday, Genesis, like a market maker, just announced that they also will have a huge liquidity crisis. But before we touch on all of that, I would like to ask my panelists to quickly present themselves, talk about what your job looks like and how you maybe got in touch with crypto. Thomas, would you like to start?
Sure, happy to do so. So my name is Thomas Brunner. I'm the head of custody and DeFi at Signum. Signum, we are a digital assets technology group with a banking license. So that means we have a full banking license here in Switzerland, where I'm based, and we are also licensed in Singapore, where our second head office is. Maybe just two sentences about what we do. So we are a digital asset banking group. So we offer things like custody trading, lending. We have an asset management arm. We have tokenization business where we, for example, tokenize art pieces. Like recently we tokenized Picasso art piece, Warhol art piece. And then we also offer our services to other banks. So that's what we do. I'm responsible for custody and the DeFi activities that we are working on. And yeah, maybe just quickly, how did I enter crypto? So for me, the starting point was in 2015. That's when I read the Bitcoin white paper, and that was really when I went down the rabbit hole. And for a few months, I basically spent all my spare time reading and digging deeper, and basically, yeah, this fascination has really continued to the present day with so many things happening. I think it's a super exciting space to be in. And so starting point was in 2015, but it was only in 2021 when I also sort of shifted my professional focus fully to crypto and digital assets when I joined Signum in my current role. Before that, I spent a bit more than 15 years in traditional banking.
Mm-hmm. Thank you, Thomas. I share your opinion on many things you have said. Then let's directly go to David.
All right. Yeah, thank you so much for being here. My name is David Kurz. I'm a business development manager at stock3.com. So stock3.com is a trading platform, the home base for the sophisticated trader. So it's a multi-brokerage trading platform where our users can log on to the broker, and we directly route transactions and trades through the brokers, or to the brokers. And yeah, my focus is mainly on new markets. So I'm talking to tokenization companies, focusing on partnerships with crypto exchanges, so our traders can have more access to the crypto space in general. At the moment, we offer crypto trading through Just Trade, but we definitely want to expand our crypto offering. Maybe how I got into the space. So I did my whole studies in America. So all of the content I'm consuming is quite Western, I would say. And in America, there the focus on investing on crypto in general is a little bit more advanced than, for example, here in Germany. And I started to just simply invest, focusing on some retirement plans, which ultimately led me to crypto. So I started to do some research, was completely fascinated because I think it gives the upcoming generation somewhat of a purpose, because we're not doing all of the things that previous generations have done over and over again, and we can kind of create the Web 3.0 of the future, or like the finance of the future, which I thought was super fascinating.
Thank you, David. Now we had basically our two centralized entities. Now we come to our decentralized entities. We have Martin.
Yeah, thank you, Christian. My name is Martin Palazov, and I'm really happy to be here with my fellow panelists. Right now, I'm working as a DeFi strategist at MELD. MELD is a non-custodial banking protocol. We actually started on Cardano last year with the biggest initial stake pool offering on Cardano. However, we are already planning to go omni-chain. So that's our focus at the moment. We're going to implement an EVM in the nearest term. Regarding what I'm doing at the company is that mainly focusing on the DeFi side of our application. So I'm focusing on blockchain economy design, tokenomics, as well as figuring out different DeFi strategies for us to generate some interesting yields. Regarding how I started in crypto, it actually happened in 2018 when I learned about some ways of terrorist financing via Bitcoin. So I started digging deeper into it, found out about Ethereum, XRP, and then I was actually still at my university studies at Bocconi. I started writing some articles about the Asian blockchain ecosystem. At this point of time, it was more interesting for me to learn more about the Taiwan ecosystem. Also, Libra was getting some traction, although we all know how it ended. And yeah, that's in short how I started.
Perfect. Thank you very much, Martin. And now, last but not least, our Sola-X developer.
Yeah, thank you. Thank you very much, Christian. And yeah, thank you for inviting us to the panel discussion here. I'm very happy to be part of this discussion. And yeah, first of all, sorry for turning my camera off, but we as a decentralized exchange and as a decentralized company, we are completely undoxed because our company should not depend on single persons. We believe that our company should depend on the pure code that we are writing. And yeah, what are we doing? We are a smart liquidity protocol built on Solana. Since roughly 1 year, we are building a protocol that has, I mean, there are DEXs within the Solana ecosystem, but we saw that their liquidity management and their AMM architecture is not that modern in our point of view. So we are there to improve that. We have some improved liquidity management. Actually, our protocol manages the liquidity on our platform. So that means we have liquidity equally distributed towards all pools. And what we also have enabled is, for example, single-sided liquidity providing due to our AMM architecture. And that enables a liquidity provider to basically just deposit one specific asset to a pool, and then our protocol decides where the liquidity from that pool gets directed to. We call the feature smart liquidity routing. So that's one of our huge improvements that we are delivering towards the DeFi and also especially the Solana ecosystem. And yeah, how I started with crypto, that was back then in 2016. A friend of mine told me, "Hey, Keelan, have a look at Bitcoin and Ethereum." And yeah, so I did. And I really started digging deep into that. And I decided, okay, I have to orient my whole career and my, everything what I'm doing. I want to do it. And I want to do something with cryptocurrencies and the blockchain. And so I decided to work in that field. And I started working with the first project as an advisor. That was back then when ICO still worked. But yeah, that didn't work out for a long time because then in 2018, of course, there was a huge bear market. And then I shifted towards security token offerings and worked with some financial institutions in terms of asset tokenization and so on. And but yeah, roughly 2 years ago, I moved back to utility tokens because they started working again. And yeah, that's where I am right now. Working in the field of utility tokens and working on a project like Sola-X. Yeah, thank you.
Thank you very much. Yeah, I actually somewhat the journey for us at ITSA was a bit similar. That at the beginning of last year, we were very much focused on security tokens, and later on we really shifted a bit more towards the DeFi space because we just saw the immense growth. There's a lot of attraction of also from developers, but I think security tokens will have a bright future once the regulation is set in, and companies have their clarity how to deal with them. Awesome. First of all, thank you guys that you are all here today. I know you're all experts in your fields. Let's try maybe to pick up the audience a little bit, and let's start maybe with a quick explanation on how centralized and decentralized exchanges differ. For that, maybe we can touch a little bit on the idea of an order book and liquidity pools and automated market makers. Who would like to comment on that topic maybe a bit?
Yeah, why not? I would like to go ahead. So yeah, I mean, the main difference is basically that within the decentralized exchange, it's not a human trading with another human, it's a human trading with a smart contract. So that's what I mean, the modern decentralized exchanges we know, because there have been in the past some other decentralized exchanges with order books where human trades with another human. I don't know if you remember Ether Delta. I did some trades there back then when it was live in 2017. And there you were waiting for hours, maybe days, in order to get a trade executed. And there was huge problem of decentralized exchanges. And basically the new modern decentralized exchanges with automated market makers, they exactly solved this problem, that there is no liquidity within other DEXs before then. And DEXs incentivize liquidity providers to provide liquidity to a smart contract, and then a person can do a swap with that liquidity. So that's one of the huge differences between decentralized exchanges and centralized exchanges.
David?
Yeah, maybe in addition, the KYC process. So most decentralized exchanges, they don't have a KYC process and also no real on and off ramp into our fiat system. So I would also say from a usability case, and the centralized exchanges, they're a little bit more sophisticated because they're docked onto like traditional brokers or exchanges, which I would say like the normal user is quite familiar with.
And yeah, maybe to add to that, so obviously centralized exchanges, they are custodial. So basically you need to entrust your assets to them, which is probably not always a good idea. And the DEXs, which are non-custodial. And I think obviously decentralized exchanges are decentralized versus the centralized ones, and that obviously also comes or brings some key differences, like so centralized means it's a bit less transparent. You don't see everything on the chain. You don't see the code, the smart contract code, and so on. Versus a decentralized exchange, you have a lot of transparency. You can look at the code, you can look at the transactions, you see, where the fees are going, and also typically also the governance is very transparent, and there is a strictly or a clearly defined governance process. Obviously that I think is also one of the key differences that we see.
Yeah, actually, I totally agree with Thomas on the transparency part, but also we didn't touch on the price discovery when it comes to AMMs. So we should mention that, let's say Uniswap are using the constant product formula when it comes to two-sided pools, while when it comes to a centralized exchange, it's more about putting an order and someone matching it. And that's basically another difference that I find interesting.
All very good points from all of you guys, and I think this was really like the key differences already between DEXs and centralized exchanges. I've prepared this question with the idea of like what Satoshi would think about the most recent developments, because let's be honest, I think also our audience is currently most interested in the FTX fallout and also on how you guys see it, like your perspective on that matter. And for that, I would just like to say that in the Bitcoin Genesis block, which is like the first block of the Bitcoin blockchain, there is like a message written in there, which goes, the Times, which refers to the newspaper, 3rd January 2009, Chancellor on brink of second bailout for banks. If we now look at what happened with FTX, for me it has been a little bit like a Lehman crisis moment. What do you think would Satoshi think about FTX and how it all unfolded, and what's your personal opinion about FTX?
Yeah, maybe if I can go ahead. So I would say Satoshi's goal was to create a trustless system. So a system where you don't have to trust central banks, financial institutions, and so on. And he also specifically criticized banks because they do sort of a fractional reserves banking, so they basically take your money and then lend it out again, obviously for the banks in a very regulated framework. And basically he wanted to create a system where you don't have to rely on institutions to do these kind of things. And as we all know, this is one of the things that happened at FTX, that they basically lent out client assets. So I think to me it is clear that exactly this kind of things, it was the goal to basically stop that kind of things from happening. And to me anyway, I think what happened at FTX is not really related to crypto. For me, it's more, a case of highly unethical, if not criminal behavior, like a case of greed and hubris, and doesn't really have much to do with crypto.
Mm-hmm.
Yeah, I totally agree. I actually think if you take that statement and for me, it doesn't matter if you put their bank or FTX, it still makes the same sense in my opinion, because I think what happened at FTX is exactly what could have happened with any bank as well, because you never know what happens behind the closed doors, what they are doing, what they are doing on their centralized servers. You cannot see it. No one can see it. And so the potential for fraud and things that are, happening in a criminal way, I think there is the same potential that every bank or every also centralized exchange like FTX has.
Mm-hmm.
Yes, and I also completely agree to Thomas that you kind of have to differentiate it, since Bitcoin really has nothing really to do with the FTX crisis. Obviously, it's bad for the whole industry. But if you see, I think I just recently saw that FTX didn't even own any Bitcoins on the assets. And I think what we basically saw was just bad actors taking advantage of the whole blockchain and crypto hype and just scamming the customers. But nothing really changed of Bitcoin being the best store of value and just like the hardest money. Like nothing changed to the technology itself.
Sorry, Christian. In terms of the technology, I agree on this thing. However, I think that the whole Bitcoin maxi community, this is something like a celebration for them, because they're usually running away from any kind of centralized exchanges. On the other hand, we have this huge problem that happened, which is actually can be considered even a tragedy for people who actually believed in all of these centralized exchanges. From looking at the history, we can see that every single bearish market starts with the fall of one of the biggest centralized exchanges. So this one is also another example for these things. So yeah, I think that FTX was just the start of a huge wave that is about to hit some other institution. It is already happening. We're also seeing what's happening with Genesis, but I guess that we're also going to touch on this in another question afterwards. So I'll give myself a short on this one.
Mm-hmm. Yeah, when all this unfolded, like I mean, obviously, like the prices were dumping, Bitcoin was dumping, Ethereum was dumping, but like, would you guys agree that this is, I mean, maybe not for like the not too informed crypto interested person, but like for really the people who have in-depth knowledge in crypto, would you say this might be even like a bullish case for DeFi?
Definitely. I think that lots of people, when they realize, okay, money is not saved on centralized exchanges, even not on the biggest, even not on the regulated ones. A lot of people realized, okay, I think that's a lesson learned maybe again, or maybe the first time, not your keys, not your coins. And from people I've talked to, I realized, okay, they are withdrawing funds from centralized products, and they are keeping their funds now on other wallets where they control their keys. So definitely,
Mm-hmm.
Yeah, that's partially true. However, in my opinion, there is also place for centralized institutions in this crypto space. However, I think that we should put greater emphasis on transparency, regulations. Even right now with proof of reserve, it is not enough. So maybe we should even expand more on this topic and really try to see how we can actually provide not only the DeFi degens with this transparency, accountability, ability to actually audit every single transaction, but also on the CeFi side. So I'm actually curious to hear Thomas' opinion on this one.
Yeah, thanks, Martin. So I mean, I also think it would be wrong to say, because we have or had with FTX a very criminal and bad actor to basically conclude from that, yes, all centralized institutions are basically full of criminals and we should not work with them at all. But also, I think also super clear that, there was not sufficient sort of checks and balances in place. So I think if there is regulation and it's done in a smart and also technology agnostic way, it can be good for the industry. But I still think, and obviously that's a very general statement, that for a society to work, you need to have some trust, you have to trust, for example, the healthcare system, or if you go to the hospital. I think there is a place for centralized financial institutions, but we just need to make sure that they adhere to the rules. And in many areas, I totally agree. Maybe it makes more sense to fully rely on decentralized solutions. But I would just be a bit hesitant to say, because there is a few criminal and bad actors to now say, look, let's just get rid of all centralized institutions.
There was like a statement on Twitter where somebody said, well, I have never traded on Coinbase or Kraken because I found the exchange pretty dull and boring. And all those users are now saying, yeah, no, boring is fine with me now. I'm happy that it's not so excited anymore. Like I don't need that all this drama. But because Martin has just now already touched on it, and I would like not only quote Satoshi, but also quote CZ, the founder of Binance. He recently tweeted, if an exchange has to move large amounts of crypto before or after they demonstrate their wallet addresses, it is a clear sign of problems. Stay away. And what literally happened 2 weeks earlier was that apparently accidentally crypto.com sent 320,000 ETH to Gate.io, who was at that time doing a proof of reserve. So Gate.io had to prove that they had all the balances needed. And essentially during that time, crypto.com, which is also an unregulated exchange, just like FTX, I think they are located in Hong Kong, they were sending their fund and they said it's an accident. Guys, what's your thoughts on that? I'm not really sold on it yet, to be honest.
Yeah, maybe if I can, because I think it's a topic that, like for us at Signum, is very important, especially for me, basically responsible for custody. So I totally agree with CZ on this point. And I mean, in the end, that's also the beauty of the public blockchain, that you can see these chains, these transactions on chain, and it can't be covered up. And I think it's one issue with sort of point in time proof of reserves audit, where basically you do at one point in time, you do a proof of reserves audit. But then, maybe the next time you do it 6 months later, and then, if you really want, you can basically borrow the funds from somewhere and then do the proof of reserves audit, and then you can give back the assets. And during that point in time when the audit was done, it looks as if you are fully backed, when in reality you are not. So again, I think transparency is great. I think that is definitely super suspicious. But I think there are a lot of solutions for this that maybe in the past people didn't care so much about. I think now it's definitely back on top of mind of a lot of people. But for example, that is also one of the reasons why at Signum we are big fans of segregated accounts. So if as a client you have like your own blockchain address, and where you can always go and check the balance on the public blockchain, or you can even use that for the link that to your accounting system. So that gives a lot of transparency, and then you don't need. So if you have your own address, even if it is with a centralized institution, like you have a lot of transparency, and you don't need to rely on audits or things like that. Yeah, so definitely agree with CC here, and I think transparency is super important.
Yeah, actually, if I can also come up here with the non-custodial part, since at MELD we also believe highly in transparency, and what is a better way to show your crypto and what you're doing under this black box than the blockchain. So being non-custodial, you're basically allowing your own users to become your auditors. So it shouldn't be hiding anything. Everything is going to be seen. And in this case, we're even not going to be speaking about this problem of actually disclosing your balances. So this is also my side and my take on this one.
Yeah, so following up, I mean, we have the same case. Our users can follow every transaction, not only the transaction our protocol does or that are made on our protocol or within our protocol. Our users can also track our funds. So for us, it's very easy to be transparent in that case. And yeah, what I wanted to mention regarding the proof of reserves, that reminds me of, there was once very famous and big German fintech that was publicly traded, and they also did a proof of reserve, and it was not a crypto startup. I guess you might know what I'm talking about, publicly traded DAX company, Wirecard. So they also did a proof of reserve, and it quite worked for a long time that there had been, like 2 billion USD on the balance sheet. But yeah, actually they weren't. So this is not something, I mean, this is a problem. What I wanted to say on the one hand, the problem we saw with FTX, that's not just a typical problem for the blockchain industry. So it happens also outside the blockchain industry. And it also happens there where heavy regulation is in place. It happens to publicly traded companies which are even more regulated and have to be very transparent by nature. I mean, I don't know how to solve that, if more regulation can or is helpful in that case. But yeah, according to what Martin already said and how we are doing it, of course, decentralization can help to be 24/7 transparent.
David?
Maybe just to add one point, I mean, the whole idea of blockchain is to create a trustless system where you don't really have to trust on people, right, who can be fraudulent, and everything can be seen on the blockchain and verified on the blockchain. But like, in order to do so, you need also educated regulators who are experts on the code, because like not having educated regulation doesn't really help anything. So I think, yeah, it goes hand in hand. It goes, with education and the regulatory perspective, but also just But the proof of reserve, I think, is still definitely one point how we can secure it.
Yeah, I would agree with you, David, because what I still see, and I mean, this is, I think, also quite obvious, that like the regulators or like also government, they still sometimes struggle to also grasp like how certain decentralized protocols work. I mean, we saw that, for example, with Tornado Cash, right, where, for example, Tornado Cash got banned, and this is literally just code in the internet that cannot be removed anymore. And you just see certain actions where you ask yourself, okay, what might be something that's really needed is like a sandbox testing where also they can like approve certain protocols as safe, and then it could be like a decentralized alternative also to centralized players. With that, I would like to jump to a very interesting piece I saw 3, 4, 5 days ago. Not sure if you guys saw this one as well. It's by the SEC Commissioner Hester Pierce. And I know that she is very involved with crypto. She was also, I think, in 2021 in St. Moritz. There was, I think, the crypto summit. And she was also there as a speaker, so she's very much involved with the ecosystem. She knows many protocols, many entities. And during a Bloomberg interview, she herself said that she has been very disappointed with the lack of clarity regarding cryptocurrency regulation, and that a more transparent system is needed. And by that, I would also say that she gives some fault of this FTX fallout to the SEC itself. And I'm curious, what are your thoughts on this? Has the SEC maybe failed to protect the customers, the retail customers especially?
I think it is very difficult to protect the customers in that case, because before our discussion here, I really started thinking about FTX a lot, and of course also then Wirecard came in my mind, and I thought, how does more regulation in that case help? And I thought, I mean, to prevent the management board from doing fraudulent things, then you have to have the regulator being 24/7 next to the board of directors and the management of a company, and that just doesn't work. So for me, it's very difficult to answer that question, and I don't see a way how it could work, honestly.
Okay, I would just quickly add one phrase. What I'm a little bit referring to is that on Twitter, many people said, hey, Coinbase and Kraken, they are boring. Why are they boring? Because Coinbase and Kraken have been very cautious this with what services they offer. And they have been often asking the SEC, hey guys, what about if we offer this product? How about this product? And very often there was just no clarity. The SEC was going by the idea, we will go from step to step, and if we don't like it, we will just enforce a rule and just say like it's prohibited. I think that's also what happened, for example, with USDC when Coinbase tried to offer a yield on their USDC program. So it goes a little bit in this direction. So not only that they basically keep an eye on each player, but also that the players who would want to stick to the rules have the ability to do so by having the clarity that they need.
Yeah, maybe I can say something to that, because we are obviously, as a Swiss regulated bank, we have a lot of interactions with the regulator here in Switzerland, and whenever we want to start offering new products, be it in the DeFi space, this needs to be discussed and green lighted by the regulator. So I think we definitely are aware of the problem. And I think one interesting perspective on this topic, I think, came from Brian Armstrong, the CEO and founder of Coinbase. Like he said, because of the lack of clarity and so on of the regulator in the US, like a lot of these big platforms, they went offshore. So they went to the Bahamas or other jurisdictions that are maybe only lightly regulated. And then US citizens, they, just use those platforms, and they maybe don't care that much if it's regulated in the US or wherever. And the result is that a lot of US citizens got hurt. And obviously one big job of the regulator is investor protection, to make sure that investors are aware of the risks and so on. And by basically creating this lack of clarity, they certainly not helped with the problem. And I guess in the US, it's maybe another reason for maybe the complexities, that you have the SEC and then you have the CFTC, and it's a bit unclear, is it now, when is it a security, when it is a commodity? And I guess that also doesn't help when it's not even clear which agency is really in charge. And maybe one last point, which I find promising, is that she said that a more transparent system is needed. And obviously, as we have now discussed, decentralized finance is very transparent. And so, this could be seen as maybe a hint that decentralized systems that offer a lot of transparency are hopefully favored, or at least not hindered by the regulator.
Actually, to follow up on what Thomas said, I think that at this stage of the crypto development, we can see that CeFi and DeFi shouldn't be competitors. Actually, they can actually work together and serve as a bridge between one another. Without each other, they can basically not exist. So they can even serve as a catalyst for one another. What I was thinking for the United States and SEC is that recently SEC started actually suing different CeFi companies who were offering the earn product, more or less, and at the end only Gemini left. And right now, even in New York, I think they're the only active exchange who is actually offering this kind of product. They're basically suffering from this because their connection with Genesis, their liquidity provider, and I think this is only another use case that is showing us that maybe we're not advancing in the right way. Maybe they should have also blocked them from doing this product. So it's interesting to see how this is going to evolve.
And then I have one more aspect. So we had now the SEC, which is the regulators. We had the exchanges, who basically committed the fraud. But I would also like to very briefly, to touch on the VCs, on the venture capitalists who have been funding a lot in the ecosystem. I mean, Alameda was not only a market maker, but they also were like investing a lot of projects. Just my personal view a little bit on this before I come to the question. I always feel like you can extract a certain amount of money from the market through arbitrage, market making, and other services. But I also often feel like once you have reached a certain size, they need to come up with more profitable trades. And this was always where I feel like many of such trading venues suddenly started to discovering like VC investments. And I think this was also the same for Alameda. And the Kraken founder, Jesse Powell, in a Twitter space said that there was big irregularities which were easy to spot. For example, I think FTX had like 50 employees in total, I guess, something around that, or like, let's say 50 people who were running the core business at least. And the security team of Kraken is alone 100 people. And also, if you would have added up the sums that FTX were spending on the ecosystem, and for example, also for ads, for stadiums, for all these different contracts that they had, it also didn't add up to the numbers basically that they had raised before. But obviously, Jesse was also saying like you don't strike against the apparently winning competitor. This doesn't make you look very good in the ecosystem. But I would like to know also you guys' opinion on didn't all the VCs fail somewhat? I mean, if this is literally their core business of evaluating also companies, looking how the cash flows look, etc. Like even if there is like the SEC, which has failed us, or like other regulators as well, but the VCs they should have known somewhat, right? What's your take, guys?
Yeah, so from what I saw, I mean, we have to take a look at when FTX became quite large and what else happened during that time. And FTX, they really took off during a time when money was so cheap, money got printed everywhere, and all the VCs had so much money they had to put somewhere. And there was a huge problem that I mean, that's not only a problem for our industry, the crypto industry, it's also a problem for the fintech industry, from what I know. And I think also for other industries as well. So all the VCs, they just invested into unprofitable businesses. And I mean, we see it now where all the other valuations are going. So they are halving, they are dividing the valuation by 3, by 4. And we're talking about I'm talking about large fintechs, large startups with in their series A, B, C, D, E. And we saw it everywhere. And I think that was something, VCs were behaving like treating startups like the hot potato, hoping that, okay, in 3 months, they are going to do the next round and someone else is paying 100% more for this already totally overvalued startup. And as that was happening, I think, they didn't have a closer look at the balance sheet. They didn't do proper valuation. I mean, it's always very difficult to evaluate a startup that has little to no revenue or is in the growth stage. So it's not as easy to evaluate like a traditional company that has a stable income and so on. So that made it very speculative. And then on the other hand, as I mentioned, the easy access to large amounts of money that led to these valuation and these cases that companies got funded that had no proper financial fundamentals. Let me put it that way.
Mm-hmm. Actually, one short addition from my side. What you just said, Adam Kohan once tweeted that whenever he got a VC deal on his table, it was 8 a.m. in the morning. And if he hadn't decided until 8 p.m. in the evening, the deal would have already been gone. So there was literally 12 hours for due diligence. And apparently, it was not conducted on a regular basis. Just wanted to add it, maybe some more. Yeah.
I can absolutely imagine. Yeah, it makes absolutely sense for me. And what else I wanted to add is, I mean, what we're seeing now, we are seeing lots of VCs stepping away from Series A, B, C, D, and investing into more early stage. We saw a large amount of very well-known, German VCs in my case, that said, okay, now we're going to focus on pre-seed rounds or seed rounds in order to have the way better valuations. So I think that's their reaction to what happened during the last few years when we had so much money in the markets.
Mm-hmm. Okay, then
maybe I'll add one point. So I mean, Sam Bankman-Fried, he was basically seen as a godlike trading figure. So he was like the angel of the crypto industry who said he will donate most of his fortune to nonprofit organizations. So I definitely think it's going to be interesting how all of this will unfold in the next couple of weeks, a month, to see what was really happening behind the curtain. Because I think a big red flag was there was no board of directors at FTX. I think there have been multiple relationships within the company with the leadership. So quite a few like red flags, which basically the VCs kind of closed one or two eyes to just invest into this and this trading legend.
Mm-hmm. Yeah, I fully agree. It was somewhat the same for me, that I was thinking, well, if every big player trusts FTX, why shouldn't I trust FTX too, right? And it's literally trickled down from the top to the bottom, and now everybody is like hurt from what has unfolded. And yeah, I think like in the next 2 to 3 weeks, we will see a lot more inside infos of what has actually unfolded. Maybe now that we have spoken so much about FTX, maybe we can like do a little switch over and describe a little bit the relationship also between DEXs and centralized exchanges, also in regard to price action, or let's say also liquidity. For that, I have like 2 examples. Maybe they're already known to the audience, but I will just briefly explain them. We have once Uniswap version 3. Uniswap version 3 uses concentrated liquidity. So let's say I want to be a liquidity provider. In Uniswap version 2, if I would have provided liquidity, then my liquidity would be provided from the price 0 to infinite. In Uniswap version 3, I can choose my own boundaries. So I can say, for example, I want to provide Ethereum from a price from $1,000 to $1,500. And then my liquidity is only basically in that range. And Uniswap version 3 is, I think, a good example where it's very important that those pools are regularly arbitraged, also with centralized exchanges, which means that Uniswap, I guess, needs centralized exchanges to have enough liquidity in the pools. And I think another nice example is GMX, which is now, by now, the biggest perpetual futures platform. It has overtaken DYDX in total value locked according to DeFi Llama, and they have been using FTX price feeds and Binance price feeds for their internal pricing oracle. And now that FTX went bust, they have switched from FTX to Bitfinex. So just a quick introduction. Now back to you guys. How do you see the relationship between DEXs and centralized exchanges? Is it, I'm interested in your opinions. Anybody would like to comment on that?
Yeah, maybe on the connection between perpetual or derivatives decentralized platforms like DYDX and GMX. At the moment, what they're basically connecting themselves with different centralized companies, especially for price information. For example, DYDX is using, I think on average, about 15 different sources in order to get price discovery for the different leveraged positions. So they can basically calculate the difference between the spot price and, let's say, the premium or the discount of the current position. It is interesting how they're basically leveraging this kind of information, but at the end, it is still linking CeFi with DeFi, which at the end might turn out to be the wrong way to do things. However, at the moment, I don't feel like there is a better option for them to actually leverage. If they, for example, get information from automated market makers, then the price is not going to be so accurate. So yeah, that's my take on this one.
Mm-hmm.
Yeah, I would definitely agree with that. I mean, obviously, it would be bad if a decentralized protocol would have sort of a singular dependency on a specific DEX or so. But for example, if DEX uses a price feed from two centralized exchanges, and maybe we should make that number 4 or whatever. But you know, if there is sufficient diversification, then in my opinion, that's fine and will probably result, you know, in a better solution, because as Martin pointed out, in the end, the goal should also be to offer a good product and not just you know, not rely on centralized players without looking at the impact. So I guess maybe in a perfect world, it would be nice to not have this dependency, but I think I personally think it's okay to be pragmatic there, and obviously you need to diversify and not have a very strong and singular dependency, but if you make sure that you don't have such a strong dependency, I don't see a big issue there.
Yeah, I totally agree. And I mean, what we cannot forget, in the end, we are still an ecosystem as it is. So we have DEXs, we have CEXs, and of course, the prices on centralized exchanges influence the prices on DEXs as well. So there is, in my opinion, no reason for saying, okay, or in my opinion, it's totally okay as a decentralized exchange to use these price feeds. And what Thomas mentioned, of course, diversification is, diversification is always good. And also in this case, of course, it makes absolutely sense, in my opinion. And yeah, that was just my take on that.
Mm-hmm. No, I have to or some more comment, or should I just comment on it? Okay, then I will just quickly comment on it. Yeah, I agree also with you, Thomas, because it's very interesting that if you go on Paraswap on Arbitrum, and you will try to do any BTC or Ethereum swap, Paraswap will funnel each transaction through GMX, because they simply have no slippage because of the internal price feed. So even the DEX aggregators, they are then basically heavily relying on something like GMX, which just proves that maybe it's not fully decentralized, but they have best execution price-wise, and therefore they are being used. Because you have also spoken about this a little bit before, the term earn feature was mentioned quite often, and I think we can all agree that besides spot and derivative trading, centralized exchanges have also offered other type of services. Does anybody here maybe like quickly want to explain maybe what such services could have looked like? And then maybe in the next step, you could maybe discuss also if the centralized exchange offers such kind of services, is there like a decentralized alternative to it?
Yeah, actually, we see that there is the demand for NFTs is growing. So different CeFi players started offering NFT loans. So you can basically provide your CryptoPunk as a collateral and receive a loan against it. This kind of loan origination is currently happening more or less OTC. However, there are already some present solutions that are more in the DeFi spectrum, such as NFTFi, when it is like more peer-to-peer solution. We also saw BendDAO, where an automated actually solution turned out to fail, but I guess with the right logic and with the improvement of this technology, we're going to get to even better results in the future. So that's something interesting. I also think that other centralized institutions are already providing different kinds of NFT offerings, and I'm actually referring to the one provided by Signum. So even Thomas can talk about it if he's interested.
Sure. Yeah, thank you for that segue. So yeah, I mean, obviously NFT is one area, but that maybe there are a few others as well. We have touched on it earlier. Custody is one, and I think many centralized exchanges, they are sort of trying to become, the crypto one-stop shop for their users, basically. So the user can log into whatever centralized platform, and they can basically meet all their sort of crypto needs there. So custody, obviously things like staking, lending with crypto as collateral, but also NFTs, as Martin mentioned. Then on the other hand, borrowing. And I think all these things can also be offered from a decentralized solution. And I guess probably the only one that you can't really decentralize, but which is also super important, is sort of the fiat on and off ramp. And obviously, at least as long as we don't have central bank digital currencies, there's probably some kind of centralized institution that needs to be there to help with the fiat on and off ramp.
Yeah, actually on the on and off ramping, at MELD, we're actually focusing specifically on this thing, bridging the traditional world with DeFi. So we are already working on this is actually our key selling point, providing loans in fiat against a crypto collateral. So stay tuned for it, and there is going to be some interesting stuff in this direction.
Yeah, that I mean, I actually also wanted to say exactly the same. In my opinion, there are lots of services that are offered by centralized exchanges that can be decentralized, but the biggest bottleneck is still definitely the fiat on and off ramping. And yeah, for that reason, it's very interesting what you mentioned, Martin, your solution. And yeah, I'm really looking forward to yeah, how does the world look like if there is a digital dollar, euro, yen on the blockchain? That might be a game changer for the whole ecosystem. But if that doesn't change, in my opinion, we cannot see large scale disruption of decentralized exchanges. So or the decentralized exchanges are disrupting the centralized ones. And until then, we still have to stick to an ecosystem where we have both hand in hand, and users can use both, and each had their own role within the ecosystem.
Absolutely, and I think that if you keep compliant with new regulations, as you know, MiCA is coming next year. I think by following those frameworks and building the right technology, at the end we're going to get to better results. But in this case, I think getting things right and also not compromising on the time required for getting them right is crucial.
Yeah.
Okay, then I think from my side there is no more questions, but I know we only have 2 minutes left. Maybe we can do like 2-3 minutes longer. And just quickly, I think there's 2 questions from the audience. The first one is from Mr. Monkey. He asks, do you see risks or advantages to reveal custody reserves of centralized exchanges in real time, means continuous? Is there any risks or disadvantages by having this transparency with centralized exchanges?
No, I don't see any risks there involved. I mean, it doesn't matter if the assets are under custody or if the assets are on a cold wallet or on a hot wallet. It actually doesn't matter, as long as the wallet can be associated with that account and with that company. I don't think that there is any problem associated with it. Actually, I think it's a good thing if we would have that clarity and be able to monitor all these wallets that have the company reserves.
Mm-hmm.
I mean, I would agree that transparency is good. I would still prefer actually the model, instead of having wallets that are associated with a centralized exchange, that basically each client gets his or her own wallet address, and then me as a client, I can sort of verify my balance independently. And yeah, so I think that's a superior model, but I think sort of this continuous proof of reserves is certainly also good. I have to say I was still a bit surprised. So Binance, for example, they recently published the wallet addresses that hold their assets. Some of them, like 9-digit or very high amounts on these wallets. And I mean, there are still, with like, for example, there could be DOS attacks and things like that. So I wouldn't say that it's without any risks, but still, I would say the benefit of transparency is certainly more more important.
Mm-hmm. And then we have one last question, and I think that's a very nice one, because it somewhat touches on an issue that was basically related to FTT, which was the token of the FTX exchange, and it refers to DEXs, and it goes like, many DEX and centralized exchange introduced their own tokens for different purposes. In the case of FTX, they were printing money out of thin air with the FTT token. Some DEXs use the tokens to incentivize their liquidity. I think a good example here could be, for example, a Curve, where you have Curve rewards directed at different pools. And then the question goes, do you think exchanges should rethink their tokenomics, or regulators should get involved? And I would assume that this also target a little bit at this hidden inflation, where it's not always so obvious on how tokenomics are. What are your thoughts, guys?
Yeah, so regarding tokens that are without any utility or not bringing any kind of real yield back to the user who is basically staking it, I don't see any sense in this one. Furthermore, with the case of FTT, they were basically using their own token as a collateral to print more money, which is again another wrongdoing in my opinion. And I believe that also for DeFi protocols, they shouldn't, or at least be really careful whenever they're offering their native token to be used as a collateral or to be borrowed. So to actually continue with this one is the exchange should really try to focus on the way they're actually generating yields whenever they're utilizing their token. It's not only about getting some kind of an IPO out of the unregulated side of DeFi. It's more about finding their actual use cases.
Mm-hmm.
Yeah, so I think that, of course, utility is a key element of each token. And in my opinion, for centralized exchanges, it is very difficult to define a useful token utility. I mean, we see Coinbase, everyone knows Coinbase, and they work perfectly without any token. In terms of DEXs, a DEX can definitely work without a token. It's just a matter of, I think, difference between do you have a token or don't you have a token, and what can be done with your token is the way how you fundraise or how you raise funds. I mean, companies like Coinbase, they did several rounds of fundraising rounds and until their IPO, and that's a different methodology. And if you look at some DeFi projects, they raise funds through selling a token. And most of them, or most of the DEXs give back through that token to the investors is I mean, of course, they have staking programs, and these staking programs, what people can do there is, or what people earn is a portion of the swap fees, for example. And that's something that works because then the investors are financially incentivized to hold the token, to buy the token, to hold the token, and to stake that token. That makes sense. But of course, in my opinion, yeah, as I said, it's very difficult as centralized exchange, where's your token utility? And if you compare, for example, the FTT token, I mean, I don't know the utilities, but I'm for myself, I'm a Binance user, and but when it comes to their token, I only use it for gas fees, honestly, for their own layer 2 solution. But I've never used the token within their platform, honestly. So yeah. I think that maybe shows a little bit how there is not that much utility involved with the tokens of centralized exchanges.
Yeah, I agree, and I think for BNB it's also like an extra case because they have like the Binance Smart Chain and basically the Binance Chain, and then you have like two use cases. Okay, we're already 6 minutes over. Maybe I mean like a very, very, very last question, and you just have to have like 3-4 seconds to answer. Let's do a little survey. Will there be more pain in the market, or do you think the pain has already been flushed out? Just very quickly, everybody, like 5-6 seconds. Maybe we start with Thomas.
Yeah, I'm afraid there will be more pain.
David?
A little bit more pain coming, but we're almost there.
Okay. Then Martin?
Yeah, also in my opinion, more pain to come, but it's also a good time to rebuild, as CZ said.
Yeah, and then we have the guy from Sola-X.
Yeah, we are prepared for the worst and hoping for the best. So yeah, I think right now we have to expect more bad things to happen, or at least not a good market situation.
Yeah, but the best thing is after it has bottomed, right? It cannot go further down, and I think we will see that at least within like half a year, or let's say within 1 year. And yes, I just want to thank all of you guys for being here today. I hope you also had fun. This was for me like a very pleasurable discussion, and maybe we can do something similar again in the next year. Maybe when we have some more knowledge on basically what all happened behind the closed doors with FTX. And then I want to thank you again, and have a nice day. And to our audience, I hope you also enjoyed this panel discussion today. We will keep you updated when we will basically preparing the next one, and to you also a nice Thursday day. Then goodbye.
Thank you. Goodbye.
Thank you.
Thank you.
Okay.